Hi guys, Will here from WB Trading and welcome back. If you're new to the channel, please do hit that subscribe notification and tap the bell icon so that you don't miss any of the free content I share with the trading community here on YouTube. So one of the topics I'm approached most often about is without a doubt sources of edge that people feel they've uncovered. And they're at that stage where they've perhaps noticed a pattern or an occurrence within a certain market and they're wondering what to do next. So in this video, I'm going to answer that question for you and walk you through exactly what I do and have done in the past in that scenario. So firstly, what's the difference between an edge and a strategy? And just before I get into this, it would be absolutely brilliant if you'd hit the thumbs up button. That would be a huge help. So an edge, in my opinion, is a statistically proven occurrence that, when traded repeatedly across a large enough sample size, delivers a favourable, profitable outcome more often than not. Meaning that after every, say, 50 trades or 100 trades, you're always left with profit. A strategy, on the other hand, is the formula for actually trading that edge, telling you where and when to buy, where and when to sell, where to put a stop loss, a take profit, how to size the position, so on and so forth. The strategy kind of contains the rules or the play that actually allows for the edge to be traded. So when I find a new edge, the first thing I do is typically create a document that I can add to my playbook of trading setups, and this document will fully outline in detail how and why the edge and the strategy I've built around the edge actually works. So let's take a random fictional example. I might begin by noting what I've found, i.e. I might write the following. So I've realized that after extensive testing, buying a breakout of the M1 candle opening range on X market allows me to reach a 2R target 55% of the time. That's the basic explanation of the edge. Now, in terms of strategy rules, I might note that to trade the edge, I'll highlight the first 1 minute candle high and low, and whichever way price breaks from there, I'll either get long with a stop at X or I'll sell short with a stop at Y. And then from there, I'll move into beginning to build more in detail stats to kind of firm things up, make things a little bit more concrete, so to speak. So let's say you found the above edge, but now you're asking, well, what stats do I need to build? What stats should I be recording, taking a closer look at, so on and so forth? And in this scenario, my suggestion would be the following. So always start with MAE and MFE, which stands for maximum adverse excursion and maximum favourable excursion. If you don't know what these are calculations that basically tell you, on average, how far does price move against you when you take a trade, and how far does price move in your favour when you take a trade. Very, very useful stats to be aware of. And in fact, knowing my own MFE for my pound dollar strategy was actually the one statistic that was able to reveal that the edge was actually profitable long term for me, and therefore kind of made the edge viable. And it was at that stage that I took it live. So again, MAE and MFE stats are very, very valuable to be aware of. Next, you might trial things like varying stop loss distances, take profit distances, and again, this is somewhat related to your MAE and MFE stats. The two kind of go hand in hand here, and what you're trying to do is reduce your stop loss distance where possible, increase your take profit level where possible, and just kind of try and squeeze as much juice out of the edges as you can, really. Next, can the edge be carried into other markets, and or where does the edge perform best? So slower markets, faster markets, it might work best on indexes, currencies, equities. This is all stuff that you need to play around with, because at times certain setups do require certain market conditions to flourish and perform best. Next, does the edge perform best at a certain time of day, i.e. the London Open, the US Open, the Asian Session Open, etc.? Again, play around with this, and you never know what you might be able to find. Now, Let's say by this stage, you've been able to build a strategy that allows you to trade the edge. You have your setup, you have your rules and guidelines. At this point, with a strategy in place, the first thing you'll probably need to do is the following. So run a 50 trade test. And what this does is it allows for an accurate sample size. And if you do have edge, you should almost always be profitable across this 50 trade period. So this is almost a safety test. Now, when you've done this and you have this data in hand, you'll need to begin asking a few questions, i.e., what's been the largest drawdown? What's been the largest run-up? What's the win rate looking like? What's the size of the average win? What's the size of the average loss? And so on. And what you're trying to do by answering these questions is to begin to learn the edge inside out, using factual stats to remove the need to guess, to be unsure if anything adverse happens, and overall to prepare yourself in as many ways as possible so that you can trade the edge with as much confidence as possible going forward. Because as we all know, confidence is essential if you're going to execute well, and especially if you're going to stay consistent. If, for example, you don't know the above stats, you might begin trading the edge, experience 2 or 3 losses, and start to worry, start to think, does the edge work? This is where the stats are really, really handy because they keep you focused, they keep you on track, and they provide a framework that should allow you to understand as many aspects of potential performance as possible. So as an example, you wouldn't be worried about X number of consecutive losses because you know you've had Y number of consecutive losses in the past. Or you won't be asking yourself, where do I place a stop and why? Because again, you've already answered this in your testing phase. And you know that if you place a stop at X, for example, you're going to be better off in the long term than if you place a stop at Y, and so on. Long story short, you have to know your edge, know your strategy, and know your market or markets that you're applying this to inside out. And you have to be able to quantify every action you're taking and understand why you're taking it and measure this, recording your actions and the outcomes along the way so that you can stay on top of performance in just as many ways as possible. You know, trading is a performance-based career, isn't it? So it's essential that you perform at your best and track your performance so that you're able to improve in any and every way possible as you progress. Now, yes, the markets are fundamentally random, and random outcomes should always be understood, respected, factored in, and so on. But overall, if you've done your job, you'll have statistically proven that the edge is profitable over a large enough sample size of trades. You'll have built a strategy based on the cold hard stats that you've put together, and this will allow you to trade the edge with confidence, showing you a profit as you do so. And that's the goal, isn't it? So that's it. I hope that's been useful. I hope that's provided value. If you do have any thoughts or questions on any of the above, please do visit the comments section below the video. I'll happily get these answered for you. Please do subscribe if you haven't. And as always, guys, trade with edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, guys.